good afternoon, or good evening, depending on your time of day. This is Nick with Nick's Bookkeeping on Taxes. Now, 2022 tax season is coming up, and want to go over a little bit of information on taxes, some general ideas and concept that some people may think is hard or may not be that clear on, and then I'm going to go straight into showing how to do and prepare just a simple 1040 tax return for one person, one W-2. Not really complicated, not a bunch of details, not a lot of stuff. Just going to go and show a simple 1040 federal tax return with one W-2. That's it, nothing else. Do line by line instruction tutorials. Hopefully you can follow along. You can see it line by line. You can do the math with me. If not, you can stop the video, practice afterwards. You can see the math and get a better understanding of how the tax return works, at least the math part, in doing the return, preparing the numbers. And hey, if you want to do taxes yourself, or if you have somebody doing the taxes for you and you want to review it, you want to talk to them, ask them why they did this, how they did it, to better understanding of the tax return that is prepared by you or by them. Now, one thing or a couple things I want to say is that taxes is nothing more than basic addition and subtraction. There are certain forms that may have certain mathematical requirements, like some percentages in there, depending on the form. But that's only if you have a lot of stuff. You only have just you, or maybe just you and another, and you only have one W-2. It's not a lot. Simple. But it's just addition, subtraction. That is it. Out of taxes. Now, I want to thank you for watching the video. If you have any questions, you can always contact me, actually. Message, email. In fact, I have a website right here at nicksbookkeepingmc.com. And again, go ahead and read it. You can type in Google. Go ahead. nicksbookkeepingmc.com. Ask me questions. You can send me a message. You can even ask, hey, if you're in the same area as me, can I help you do your taxes? Sure. I can help you with taxes. I even go ahead and help you get the taxes filed, or I'll do the taxes for you if it's not too much going on. And all businesses out there, if you need somebody that can help with bookkeeping, accounting, prepare tax returns, I'll help you out preparing tax returns, or bookkeeping, or accounting. And got business residents there, I can help you with things too. So just contact me, nicksbookkeepingmc.com. I have a full website right there. Alright, so, and also, if you have any questions that maybe I can answer, well, there is the irs.gov. You can go and look, credits, deductions, individuals, businesses. You got child tax credits, standard deduction, health coverage, earned income. You got forms and publications right there, all the forms you need, instructions you need. All the information you need right there at irs.gov. Go right to that. You'll need a computer, internet connection, at home, library, somewhere. You can even go on your phone, smartphone nowadays. irs.gov, it'll take you there. You can look up all this information. Alright? So I want to let you know that, aside from bookkeeping now. Another thing, go back to this tax return here. Another thing I want to mention, aside from the how to go down the return, is some people think the Schedule A, before I dive into the return, is always needed with the return. Well, not always. Granted, if you have so many deductions, you have large medical deductions, huge dental deductions, you have some type of huge, I don't know, let's say a multi-million-dollar house and you get $20,000 in mortgage interest and just some big stuff like that. Yes, you may want to use Schedule A itemized deductions to lower your taxable income and to lower your taxes. But not a lot of people always have such huge amounts of itemized deductions like those, or maybe huge jury duties or uniforms. There's just not so much money spent on itemized over the standard. And we're not going to cover itemized deductions, but people sometimes think that, and it's not always the case. Usually it's standard for most people. And also, the way that the tax and withholding works, I want to mention this because I had this happen to some people I know. Some people think, oh, just because they had a refund one year or the past few years, oh, they'll always get a refund the next year, even if the tax return form is done correctly. I know people who have had a refund their whole life, every single year. Always a refund, always money coming back to them. And guess what? The next year, they had taxes owed. Even if it was $20, $30, they owe taxes. And why, may I ask? Not because they didn't do anything wrong. Because the employer, accountant, bookkeeper, whoever it is, did not do the W-4 publication 15T correctly. Which, if you go back to irs.gov, right there, you go forms instructions, and you can look up Form W-4 right there. You can type in publication 15T, and right there you can get information about public 15T federal income tax withholding methods, and forms all the information right here on the website irs.gov. But I know people that have that happen, and they wonder, why do they owe after they always got a refund all the time, every year? Like I said, the employer bookkeeper account, they screwed up. Because the whole point of your federal income tax withholding is your employer, whoever it is, they withhold enough money based on the W-4 to pay your required tax at the end of the tax season time. That's their job, is supposed to withhold that money to pay the required tax. And yet it's happened where the employer, whoever it is, did not withhold enough money to pay the required tax in accordance with whatever withholding method they use. And in turn, the employer, whoever it is, shorted the employee the amount they should have withheld to pay the required tax, and the employer did not hold enough, and hence the employee owed tax. Not the employee's fault, not the tax return was done itself incorrectly, but the employer, whoever it is, did not do their job correctly, did not follow these guidelines correctly, did not withhold enough tax correctly for the amount required, and hence the employee had to find another way to pay the extra $20 the employer should have withheld in accordance to the required method in the first place. So it happened. I've seen it happen, and so you know, it can happen. So if you always get a refund, and you don't get a refund, just think, and tax return is done correctly, maybe there's something happened with this from their side. Ask, investigate. You never know until you ask. So let's get back to the actual return. So we're going to go off a simple example of one person, one W-2, one income, single, that's it. Later videos, hopefully I'll get into maybe some more detailed examples of how to do tax return. I'll prepare a tax return for you or somebody else, and you can work and you can contact me and so forth. But I'm going to do very simple right now, one person. So here's an example. We have this person named, let's say, Kevin Bushi. It can be anybody. He lives, let's say, Rochester, Michigan. It can be anybody. It doesn't matter where. These are all fictional examples or made up. They're not real. There's just some person made up for the example. So let's say we have this person, Kevin Bushi. He lives in Rochester. He is single. He has no children. He's 46 years old, perfectly healthy, no medical issues, no dental bills for the year, no dental issues, nothing. He lives by himself on his condominium property he has owned multiple years. He has one job as a store clerk. His W-2 income is $26,000. Federal tax withheld is $2,392.50. He has no other income. He has mortgage interest of $1,000 and property tax of $400. He asks you, can you prepare a tax return? So looking at this example, you already know. He is single. No children, so he's not married, he has no dependents, no children, nothing. He is just single. He's 46 years old. He's not 80, 90. He's not 2 or 3. He's 46 years old. He's perfectly healthy. He has no medical dental issues, which means you have no medical bills, dental bills, nothing big like that. It's just him on his property. In fact, they own it for multiple years. He has interest deduction, mortgage interest, and property taxes. Okay, but that's it. One W-2 income, $26,000. Nothing else. So based off this example right here, so what we're going to do, step-by-step tutorial on how to do a simple 1040 one W-2 tax return. So I'll go to tax return. First thing we do is this person single, married, head of household? We have established he is single. So first line, click single. Next, of course, you got your personal information. You have your name, first name, last name. Go back. We're going to call him Mr. Kevin Bushi. Then, if you were married, your wife, but he's not wife, he's single. This is personal information. Of course, it's not real, made up. His address, which in this case we're going to say Lagoon Drive. And of course, according to the example, he's in Rochester, Michigan, whatever the zip code is. It's all made up. So you got your single, personal information, name, last name, address, city, state, zip code. Done. Next line. Foreign. Again, it's the United States, 1040. This is not foreign, so we leave it blank. Right there. Next line. Presidential election campaign. All this means is, do you really want to give $3 to the government? Now, maybe there are certain people in the world that do, but truthfully, if you just really think of the government and the fact that they have the U.S. Treasury, which prints our money, which is just paper, which is what we use in order to have to buy things and live nowadays. And in fact, they print the money, they print the paper, they can always print more paper, they can always print more money. So it's up to you. Do you really want to give $3 to the government to some campaign thing when they can print their money, and most of them are already rich and playing their own money? They don't need your money, the working class. So it's up to you. You can click you, or if you're married, if you want to give $3. If not, you don't click it. We're going to leave it blank because, as you can see, his income is only $26,000 in example. There's no way he can really afford to even give up his money when there are so many other people in the presidential campaign. When you think about it, during an election, they have so much money they can afford it. So he's not going to give $3. Keep it blank. And then digital assets, next line. All this is did he receive any cryptocurrency? Did he give any Bitcoin? Did he sell Bitcoin? Did he sell cryptocurrency? Was he given anything like a digital asset, which could also be, well, some people are using now digital real estate, which is something again like cryptocurrency, Bitcoin, something on the computer that in, say, game Second Life, just something like that you can buy and sell. And Mr. Kevin Bushi does not have anything to do with no cryptocurrency, Bitcoin, nothing on the computer, just this. So Click no. He didn't do any of that. Next slide. Can somebody claim him as dependent? Again, we know he's single. He's single. He has no children. He's not married. He's 46. He lives on his own property. Nobody can claim him as a dependent. He has nobody that can be claimed, nobody else that can claim him as dependent. So the fact that he can be claimed as dependent, no. He's not married, doesn't matter, so keep those boxes blank. Now, if you could be claimed as dependent, you would, but in this case, we're not. Again, this is back to spouse. If he was married, but he's not married, leave it blank. Age of blindness. Now, granted, there is a type of deduction in regard to your age or your blindness, but Mr. Kevin here is 46 years old. So that means, was he born before 1958? No, he was not born before 1958, because if we got years, somebody born before 1950 is probably much older. So we're leaving it blank. Is he blind? No, he is perfectly healthy. He is not blind. So we are leaving this blank that he is not blind. Right there goes back to, if you're married, he's not married, we're leaving it blank. It's only if you are married as a spouse. Then next line, dependents. Again, we say no children. So if he has no children, he has no dependents. If he has no dependents, we're leaving this blank. This is only for if you have children. You have a son, or if you have a daughter, put first name, last name, number, relationship, personal information. Now, granted, if you, in a situation, maybe, let's say you taking your grandmother, maybe she was 100 years old. She's not a child, of course, but she may depend on you, and you may be able to list her as dependent, other tax situations and conditions, but that's not part of the example, just saying it's possible in other situations. For our example, he has no children, no dependents, no nothing, leaving this blank. Nothing here. So, dependents, next line. Income. Now this is where the income starts. Like I said earlier, it's no more than addition and subtraction. The same addition and subtraction you pretty much learned all through elementary, middle school, high school. It's not complicated. The only thing is, if you have multiple and different amounts of income, then one person could get confused on which is which if you have so many. But in our case, Kevin has one W-2. That's it. One W-2. So line 1A, total amount from his W-2, $26,000 as shown in the example. And then you go from 1A down the line, B, C, D, E, F, G, H, and so forth. And yeah, again, we established he has nothing else. No household tip, Medicare, employer provided benefits, care benefits, combat pay, no military. He has nothing. So go down the list. Z, you add lines 1A through 1H. So add lines 1A through 1H. That's going to be 26,000 plus 0, nothing. So obviously 26,000 plus 0 or plus nothing is still 26,000. Next line, 2A and 3A and 4A and 5. Same thing. Does he have any interest, dividends, IRA, pensions, annuities, etc.? We've established Kevin is 46, which means he's probably not withdrew any pension, any annuity, no retirement. He hasn't done anything. He's still working at a full-time job because he's 46. So go back to return. all these will be 0, nothing. No capital gain, no nothing. So go all the way down, line by line, read it, capital gain, other income, 9. You add 1z through 8. So you add 1z through 8. Well, this is all 0, so 26,000 plus 0 is, yet again, 26,000 because you're not adding anything. 26,000 plus 0 is 26. It's that simple mathematics. Then you go down next line, 10 adjustments. Again, as in the example, just going back reference point, he has nothing in here, no adjustments, no nothing but the W-2. So obviously at that line it would be 0, but just so you know, as reference, Schedule 1 has to do with alimony, gambling, operating loss for business, cancellation, foreign, earned income. We've got Alaska permanent funds, jury duty, prize, awards, stock options, and all this other stuff. Sections 951, 461, scholarship, federal grants, all this other stuff. You know, not the jury duty, I'm looking for it here for you. I just not the prizes and awards. That would be like if you won, let's say $30,000 at a casino. Yeah, $30,000 at a casino is definitely something you can add to income if something like that actually happened. But not a lot of people always win $30,000 at the casino to add that to income to be taxed on in the year. So, unless you have that, and there's other examples here, there's a penalty to withdrawal. Alimony again, educator expenses, but in the example, he has nothing but the W-2. So, Mr. Kevin here, go back to Schedule 1, he has nothing, which means this will all be blank. When filing tax, you honestly wouldn't even need it because he has nothing, but it's still blank. So, there's my adjustments, 0. So therefore, your 26,000 or his 26,000 Mr. Kevin still has, plus nothing here, plus nothing here, plus nothing there, is still adjust to 26,000. Hence that's the word adjusted gross income, because your total income plus anything that changed or adjusted, same word, same meaning, two different words, adjusted, changed, is the same. Hence word adjusted gross, because we're taking total income and we're trying to adjust it for the adjusted gross, but he has 0 in the adjustment, so we're not really adjusting it. That's just what you call it. So he still has 26,000. And now it gets the standard itemized. As I said earlier, you could itemize if you have such large bills. You have a $20,000 medical bill, a $15,000 dental bill. You have a $10,000 medical bill with a $10,000 in mortgage interest. Just big bills, big large amounts you could itemize, but he has nothing, as you read here. The only deductions he has is $1,000 of mortgage interest and property tax, $100. So he could say that he wants to itemize at $1,400 here, but then why would he want to itemize at $1,400 and pay more tax, a higher taxable income? So just know that he has nothing. We're not going to do it here. He does not have such large amounts. Completely forget about it. Just wanted you to basically understand that itemized deduction schedule A is only for people with such large amounts that are bigger than the standard deduction, when the standard deduction right here on that line 12 is $12,950. Not as much as he had. So, we're not going to turn around and we're not going to say based off 1,400. We're going to take that and he's going to do the itemized when Mr. Kevin here can take 12,950 and use a standard deduction. And hence he has a bigger deduction. With the standard deduction, lower the tax even more, and therefore have less tax required. So he's taking a standard deduction of 12,950. Again, simple deduction of 26,000 minus 12,950 is only 13,000 is actual taxable income. And that's it for income. And a couple more to go, but no more than that. Mentioned he has no deductions. The qualified business income deduction is part of that Schedule 1 adjustments. He has nothing, so that 26,000 minus 12,950, he's going to be taxable income of 13,050. So now we know the taxable income. Now, the tax on him, or if you're doing this, the tax is not hard to figure out. In fact, the tax, you don't have to do any calculations if you don't want to. The tax on a Schedule 40, 1040, federal tax return is so simple you can look up in a book, just like you're reading a book. One is you could have your own hard copy of the 1040 instructions, or two, you can go right back to the IRS.gov as mentioned, and all the forms and 1040 instructions right there. You get 1040 instructions, you can look up in the book on whatever page it's on and just find it, which I already have it up here and ready. So in this case, for Mr. Kevin Bushi, go back to his tax return. He has a taxable income of $13,050. So you get that 1040 tax instruction book. Simply go to page, I think is 66, 65, 66, depending on the bracket. And you simply look it up. So he has 13,050. It says right here, if your line X amount taxable income is one amount, and you simply look at this, and you're single, married house, and household, go by this. And that's how you even look at the table right here. It says 2022 tax table. Just like reading a book, you take the book, you open it up, go to the right page, and look it up. And so we know it's 13,050. So we're going to start here. It's 12,000. We're going to start here. I'm going to scroll down a little bit. So there's 13,000 right here. So we're going to say, okay, if his taxable income is at least 1350 over and he's single, we use this or this depending where it is, his income, and we're using this column right here. We use these three columns. An example, so you know, it would be at least 1350 but less than, and it has to be in the bracket. So if this was 1350 and this was 1300, it'd be right in that bracket. And then you go single, whatever it is. So we know it's 1350, so if you look down this column right here, it's at least 13,000 but no more 1350, and his taxable income is 1350, it hits right here in the second column. Scroll back up to show you. If taxable income is at least this but less than this, so scroll down, taxable income is at least 13,000. Yes, it is, but it's less than this. Well, we know his taxable income is at least 13,050, because you could say, one could argue that maybe he belongs in this bracket, but you gotta remember, his taxable income is at least $1350, right? If you say it's at right here, then you're saying it's at least 13,000, but less than 1350 in that second bracket. See, but less than. We don't want to go but less than. We want to go in the middle right here. At least this, but less than this. So it's at least $13,000. Yes, but is it less than 1350? No. So taxable income is at least 1350, which is right on, but less than this? Yes, because this. So Mr. Kevin taxable income, here's the bracket, here's his amount, go right over, right there, 1,364. And that's it. Just simple opening a book and reading on the tax table, no math whatsoever to find the tax. Just follow the two columns on whichever page it is, 65, 66, depending on your bracket, 2-column down. In this case, taxable income, bracket, single married, 1,364. And that will be on the next page, line 16, tax 1,364. And then of course you have your next line, Schedule 2. And Schedule 2 is right here, just tax and credits, but we already know he has no other credits, does not say anything about any other credits. Example, name, where he lives, single, children, 46, healthy, nothing about credits there, nothing about other credits, taxes there. He has one job, W-2, nothing. So scroll down, 0, we're going to put in there because he has nothing else. Next line, you add the two lines, just addition, 1617. 1364 plus 0, nothing, is still 1364. Next line, child, again he has no children, skip it. Schedule 3, he has nothing else. In fact, go line by line, you can see Mr. Kevin Bushy has nothing else here. So keep going down line, this line, that line, all the way to here. Okay, add 1920. Well, add 1920. Well, we all know 0 plus 0 is 0. So of course that's going to be 0. 22. Subtract 21 from 18. Well, if the subtraction, some people may get this confused, but again, when they're reading get confused, but it's subtraction, and if you write it out, if you're subtracting one from the other, then the second one will be on top. For example, for subtracting 21 from 18, and you write it out, it would be 18 minus 21, and 18 on top and 21 is at the bottom. I'm not going to show you right now, but that's how I do. So in this case, 21, subtract 21, which is 0, from 18 is basically 1364 minus 0, which of course 1364 minus nothing is still 1364. And you write it done. Scroll down, and again, other taxes, there's none, so of course that's going to be 0, which goes to the next line. So then your total tax is right there, 22 plus 23. 23, 0 plus 1364 is still the same, and that's your tax. It was nothing more than addition, one subtraction down there. Simply go to the tax table like a book. You look it up, you read it, type it in, you do some subtraction, and there's your tax. 22, 1364 minus 0 is still 1364. So tax is that easy as far as the process to really figure it out. After your addition, then subtractions, and you get to that point, you just look it up in the book. You know, you can order it from the IRS if you want to. You can always go to the IRS .gov website. Your library might have actual hard copy books that you can pick up for yourself if you want to, but it's that simple figuring out what your tax is once you have all your information in place. And we know from right here, payments W-2, federal tax withheld is $2,392.50, which in this case looks like the employer did a good job and they withheld enough federal tax to pay the required tax so he gets the refund or money back. So we take that amount, $2,392.50, federal tax withheld. Under payments, right where it says forms, W-2, federal income tax withheld from, read it, right there, done. And then you go down the lines, and a couple more, and they'll be done. B, C, 0, 0, we know he has nothing else. Add the lines up, 25A, 25C, same thing I've always been doing, that 2093. Now I want to mention, when you're doing the tax return, if you have something, in this case, that Mr. Kevabushi has, which is federal tax withheld of $2,392.50, when you turn around and you have 50 cents, 60 cents, something like that, you can always round up or round down. So in this case, he has $2,392.50 because it's 50 cents or more. We're going to round it up to 2,393. Now, if let's say he has $2,392.20, because it's only 20 cents, you're going to round down to 2,392. But because it's 50 and it's 50 or higher, you round up to 2,393. So go back to it. We rounded it up for 2,393, which as shows right there. You follow along right there. And then 26. Your estimated tax payments. He has no estimated tax payments in the example. 0. If you read through this, each line 27, 28, 29, etc. Earned income, child tax credit, American Opportunity Credit, which is college related. He did nothing of that, so that's all going to be 0. So keep reading each line down here. You add lines 27 to 31, which go to right here. For refundable credits, this is all 0, so of course if this is 0, 0 plus 0 plus 0 equals 0. Next line, 33. Add line 25D to 32, total payments. Well, we already know and rounded up. His employer held federal income tax on a Form W-2 of $2,393. So 25D plus these two lines plus 0 plus 0. This is still going to be 2393 withheld. No change there. And then go to the next line. If line 33 is more than 24, so then you just look at two lines and you ask yourself, is line 33 here, is it more, than line 24 or less than? Well, on the form, Mr. Kevabushi's tax is only $1,364. However, his employer did a good job with the W-2 of withholding $2,393. So 33 right here is more than 24, and because 33 is more than 24, you take the $2,393 that was withheld, subtract minus the tax required to pay, and that leaves you with your refund, or in this case that leaves Mr. Kevin here with the amount left over extra that was withheld, that is your refund, that is his refund, that he receives back $1,029 because he overpaid by $1,029. The tax was required of $1,364 by the government in the book. His employer withheld more than required. His employer only had to withhold this amount to pay his taxes. However, his employer withheld more than that to pay his taxes, which is right, based on his W-4 and his information, and in turn, he overpaid, and he paid $1,029 more than actually required, which means he gets that money back or refunded back to him, and the other half goes to taxes, and this other half goes back to Mr. Kevin Booth here in this example. So Mr. Kevin Bushi gets that $1,029 back refunded to him. And that is it for simple 1040 federal income tax return. It is no more difficult than that as far as the process goes, and just addition and subtraction line by line, especially if you are maybe similar to Mr. Kevin Bushi right here, where you're single, you have one job, one W-2, you're perfectly healthy, and you have nothing else. Then you can actually, if you want to, if you need to, you can practice. You can follow along with my video. You could practice. If you want to practice, I encourage you, go ahead and replay my video. Go line by line with me as a way to practice and maybe learn and help yourself understand better. And then, maybe you can do some on your own or help others. And just so you know, of course, once you get your amount, refund, or owed here, everything else here is just, of course, personal information which you can read for yourself. Your signature, spouse's signature, dates, the occupation, this is office use, and so that's it. Now if you have more complicated tax return, of course there are other forms, but I'm hoping maybe I'll make another video and continue with more detailed forms to help anybody that needs to help understand taxes better. So thank you for watching my video, and have a good day. Night.